you're watching Investors Guide on ET Now. Thanks for staying with us. Dhirendra is here with us as well, and we're talking about the SBI MAGNUM Tax Gain Fund. Now, Avan is here, as she always is, to give us a quick introduction into that fund before we talk about whether or not you should be investing in it. Avan.
Our big fund in focus is the MAGNUM Tax Gain Fund, one of the oldest and largest tax-saving funds in the country. Launched in March 1993, it has over 6,000 crores worth of assets under management and has given its investors an annualized return of 18% since its launch. One of the top performing schemes before the dot-com bust, MAGNUM Tax Gain fell drastically in 2000 and 2001. But the fund managed to recover handsomely in the subsequent 4 years, beating the benchmark with good margins. The fund's NAV declined in 2008 during the meltdown in our markets. Even though the fall was in line with the market indices, the fund hasn't really recovered and its performance has been mediocre ever since. Let's bring in some numbers to get you a better outlook on the fund's performance over the years. If you invested 1,000 rupees in this fund when it launched, you would have 5,773 rupees today. But should you put your money in a fund that holds a defensive position? Let's see what our experts have to say.
Thanks, Avan. The SBI MAGNUM Tax Gain Fund did not really recover from the hit it took in 2008. It's been giving us moderate returns ever since. What is your take on this fund? Do you think it's going to go back to its previous glory, or do you have any hope for that sort of returns to come back again?
I'm hopeful, but of course, these past 2 years have been greatly disappointing. It has become a fairly average fund, and I think the odds are against it. This fund has become so large among the tax savers or as an equity fund, and so that it is getting focused onto large cap stocks. And but here is a mandate, where you get all the money and it is locked in for 3 years, and these funds can take it and can get little venture sum with their allocation to mid and small cap stocks. And this is what this fund has not done very well or efficiently in recent times. So yes, this fund has been average, but I would like to give it an I would still of course, most investors who came into this fund won't have a choice, because a good part of the money will still be locked in. This fund raised a reasonable amount in 2008-9 as well. Most investors don't have a choice of exiting this fund. But I would still like to hold on to for your existing funds. Of course, this is not a extraordinary. This is not a best choice among the tax saving fund if one has to recommend to a new investor.
So if you are making recommendations to a new investor who's looking for a tax saving fund, what are the better alternatives to the SBI MAGNUM Tax Gain?
There are quite a few alternatives, and there are smaller. Of course, the SDFC tax saver stands apart. Besides that, Libra tax shield is also fairly impressive, and this is the last financial year when one can make investment in this tax saving funds.
Finally, your rating of the SBI MAGNUM Tax Gain Fund, should we be investing in it?
No, one should not be investing in it. It is not the best tax saving, or it's not a fine tax saving option today. I would give it a 2 stars.
2 stars there for the SBI MAGNUM Tax Gain Fund on Investors Guide. Now, we do know that we've received a lot of questions from you asking us about what's going on in the stock market right now and what your view should be and what you should be doing with your money given the volatility that we're seeing. Now, we know there's high inflation, we know there's high interest rates. So what should you do with that money? Should you continue investing in equities? Should you hold those stocks? Well, we've met some of the biggest experts in the stock market and we found out. Take a look. Our volatile markets have caused nervousness among investors. Political instability, Europe and the Greece crisis, and now bad news due to a possible slowdown of the US economy. But our experts tell us this is a short-term fall.
We don't see too much of a downside, frankly, on the markets, because most of these factors like high inflation, the current value of commodities of the crude, and the current rate of interest, I think these are kind of factored into the market. So we really don't see it to be falling much further. So I think the downside is limited, even though there could be volatility in the short term.
With current inflation soaring at around 9% and almost 17% of our GDP dependent on agriculture, all eyes are now on the monsoon, waiting for food inflation figures to possibly cool down.
Monsoon affects agriculture, and we dependent on agriculture to a certain extent. Surely, in case the spread is good, it is good for agri production, and because of which we expect that the food inflation will come down.
But that means if you're a long-term investor, this is just the time for you to rebalance your portfolio.
Now, when markets are volatile, it's a good time to do it. The reason is that new opportunities may have emerged which may otherwise miss you when markets stabilize. For example, if equity markets have reduced in value over time, have come off and looking gloomy or looking pessimistic, etc., valuation is low, it is quite likely that the equity portion of your portfolio has actually reduced. It means, by definition, the weight of your debt has gone up. At that point in time, it's good to maybe reallocate.
So like we keep saying, the India growth story is still intact, which means a correction is an opportunity to buy, especially since several blue chip stocks are now available at good valuations.
Yeah, I would say right now bullish in banking, we are bullish in IT, pharma, and to some extent capital goods. However, within these sectors, I would say the stock picking needs to be a little more selective than just generally going and buying any stock in the sector.
Most of the large caps have corrected decently well and available at good valuations. Among the capital goods, I would suggest Larsen & Toubro and BHEL. Among the banks, I would suggest SBI and Axis. And again, in infrastructure, I would suggest a stock like GMR Infra.
But remember, the basic rules remain the same. Research the stock and the sector you plan to invest in firsthand to understand the business you're entering, and give your investment at least 3 to 5 years to really reward you. So remember, if the market is trading low on a particular day, it's always an opportunity to buy for us retail investors, especially since we have that longer term horizon of maybe 5 to 10 years. We're going to slip into a quick break. On the other side, we're answering your questions on your child investment plans, so don't go anywhere.